All right, so welcome back to all my new traders out there that are on their journey here in 2025 to become profitable at trading the futures, whether it's the evenings or the micros. I'm going to share with you today my personal strategy, my own strategy that I've been trading for years, which has led me to be consistently profitable year after year after year. And it's very simplistic and simple. One thing I want to mention is I always talk about there's no holy grail to trading, okay, first and foremost. But you need to master market structure. You need to understand the directional shifts in the market. You need to understand which way the market's moving. Because until you are able to identify which way the market is moving on a higher base chart, you're probably going to get railroaded and you're going to find yourself in situations to where you're taking trades and you're consistently losing. Maybe you're taking one trade, good trade, a bad trade, back and forth. But the more confluence you have on your side, meaning moving with the market trend, okay, making higher highs and higher lows, should only be looking for bullish direction. Making lower lows and lower highs, should only be looking for bearish direction or pull back to key areas of supply. Until you do that, you're going to be fighting an uphill battle and you're going to be going against the trend, okay? Now, I do personally take counter trades from time to time, and I did today, to be honest with you, on a few setups, but only because I knew what I've been doing. I have the experience. I've been doing this for years, but what I want to share with you today is a way to be able to, identify key areas and basically based on the direction of the market, meaning market structure, which way you should actually be trading, okay? And the simple way of doing that is just simply being able to identify, is the market making higher highs or higher lows or lower lows and lower highs? In this case here, if we just go back and look latter part of December up until maybe shortly after New Year's, we can see the market was making lower lows and lower highs. And then down here, we have this bit of consolidation. I talked about this before. A bit of consolidation tops and bottoms could be signs of weakness where the market may want to try to turn back around and start filling gaps or reverse back to the upside or potentially the downside. Now, if you're someone that, say, for example, maybe in your 40s or 30s and maybe you have reached the age of retirement and now you're looking for something else to do with your life and you have the funds put aside to maybe where you want to kind of start, trading part-time or full-time, this could be a great opportunity for you. So kind of watch the strategy as a whole, all right? Now, I want to stop and say this right now. I'm going to be breaking down the trades that I actually personally took today and breaking them down over on the private community to those that are elite channel supporters. For a very inexpensive fee, you guys have already signed up. You get the trade breakdowns on a daily basis. That what it entails is my full-on mindset of the trades that I take, and I break them down so that you can understand the setups themselves, okay? We're going over profit target areas, stop loss areas, what my mindset was, and looking at the market at that current time or relative time, what just basically led me to taking those trades, all right? So I'm going to do a video today for all the elite channel supporters, breaking down my trades today here on the channel. So if you want access to the additional video content where you get the trade breakdowns, the video playlist, and the great, excellent video that I covered on market structure, look down in the description portion of the video. You'll see a link that's titled Elite Channel Supporters. It's only $6.99 a month, okay? It's not a trading course or a mentorship program or anything like that where I'm charging hundreds of thousands of dollars like a lot of people do. It's just simply a very inexpensive way to be able to grasp an understanding of the trades that I actually take, covering the same strategy or using the same strategy that I do each day. Now, you can spend time here on the channel watching tons of videos and potentially, kind of learn on your own, because I do go over some great content or great information here on the channel that you can kind of piece together. I always talk about taking a notepad and notes and a pen and taking good notes. But with the membership or the becoming a elite channel supporter, it's basically a tier membership program through YouTube, which allows viewers like yourself to support content creators like myself and become loyal supporters to the community. But I'm giving perks and rewards back. Again, one of them being the trade breakdowns to help you better understand how to take these setups, for one, and the trades that I take. For two, you get the video playlist and as well as a great video that I covered on market structure. Now, again, we want to be able to identify, going back and jumping back into what I was talking about, the structure of the market. All it is once you have identified which way you should be trading, if the market is bearish, looking for pullbacks to key areas of supply. If it is bullish, looking for pullbacks to key areas of demand. we had this bit of consolidation after making a run to the downside. So we were making lower lows and lower highs. And at that point, I'd have been looking for pullbacks to go short. But when I saw this consolidation here, and this was on January the 2nd, when the market started pushing back to the upside, it started taking out some structure back to the upside. Now, those who have been following the channel long enough, you know that when I like to see, I have to have a breaker structure, which lets me know that the market is possibly changing direction. But there's a certain key setup or pattern that I like to see, you know, when the market is coming from like a low. And it's basically something like this right here. Where the market is making lower lows and lower highs, okay, to the downside, and then it makes a high, a higher low, and then higher highs, where it's breaking structure here, and then we get breaking structure here. A lot of most traders would call this like a inverted head and shoulder type pattern, but it's a sign of reversal back to the upside. So that's what we had here, was a bit of consolidation. The market started to take out structure areas back to the upside as it was making these higher highs and higher lows. So where you have structure breaks to the upside and the market is reversing, okay, look for key pullbacks to areas of demand. So the market broke structure above this high right here. Made a high, higher low, broke structure higher. This right here is a key area of demand. Demand is all it is aggressive buying to the upside. When you see lots of candles push to the upside where there's a lot of momentum, that's typically the institutions and banks. We as retail traders want to be able to trade with them and like them and not against them. So first, I've identified the consolidation from the lows, okay? After making a continuous run to the downside, this is a change in direction. Consolidation, making these higher highs and higher lows, taking structure out to the left as it is. It is following this pattern right here where the market is reversing back to the upside. It pulls back, a key area of demand. Now, what I want to say is this. What makes it high probability and low probability? Because people ask that question. I even got a few comments or messages just a couple of days, over the last couple of days. The gap, if there's an imbalance or a gap resting back at the zone, and as you can see on this candle right here, okay, all right, that created this bullish run to the upside, there was a small gap back on this candle back to the actual demand zone. There must be an imbalance at the actual, or coming back to the actual zone. If it is not, then that marks it as a low probability setup. If there is a gap, then that marks it as a high probability setup, a gap or imbalance, same thing, okay? So when the market comes back to the zone, I'm going to go ahead, well, first and foremost, before it comes back to the zone, I'm going to size the market up. And notice that we had this reversal going on to the upside, taking structure out, consolidating the lows, not wanting to push lower, and then breaking structure back above. I notice this beautiful area of demand right here, okay? As it broke higher, it broke structure to the left-hand side of the chart. Now, I'm going to go ahead and mark this area. Why? Because it's a high probability zone. 2, because it has a gap resting out of it. So that marks it to be a high probability demand zone. Again, for anyone out there who's looking to, get into something else to do with their life and is on the journey to begin to learn how to trade, I'm showing you a strategy that you can use in your own personal trading. It doesn't matter if you're 30 or in your 40s. This is a way to, build that portfolio, okay? Maybe you have retirement coming in. Now you want to start, making another means or a stream of income for yourself, okay? Here's a great way of doing so. So the market pulls back to this area right here, right? Once I've marked off the zone on a higher base chart, I'm just moving down to a lower base chart to identify a lower, zone resting on the inside of this zone, meaning a high probability zone on a lower base chart. I'll mark off my higher base chart first, okay? All right, because the higher base charts or time frame charts they trump all charts, okay? So then I'm going to trade in the direction with the higher base chart, all right? Mark off the higher base chart first and then move down to my entry chart, which is my 24 range chart. Yes, I trade range charts, okay? Please, guys, don't ask me what's comparable or comparable to range and time base, because there is none, okay? All right, you may find something there where it kind of looks similar to on a time base chart. Maybe you trade off a 5-minute chart, but range charts are calculated differently than time based charts. Tick charts are calculated differently than time based charts. Volume, all those charts, they're all calculated differently. So there is no 100% guaranteed matchup, okay? So the market pulls back to this key area right here. I'm going to move down now to my lower time frame entry chart and look to see if I have a smaller zone on the 24 range chart on the inside of the zone. What does that allow me to do? For one, it allows me to zero in on a more precise entry point and get into a trade back at a smaller zone resting on the inside of this higher base zone. Now here we go, rounding out the rest of the last part of the strategy. That bigger, larger box you see right there is that box off of the 120 range chart. As you can see now, I'm on my 24 range chart, which is my entry chart, my lower time frame chart. Again, like I said, I want to see when the market is dipping back and touching the higher base 120 range demand zone. Then I want to see, is there a demand zone on the 24 range chart on the inside of the 120 range zone? There is right here. It's defined right here. There's a zone right here on the inside. All right, and I believe if I blow this up, it's high probability as well. Yes, there's a gap attached to it on this candle. Let's see, a very small gap on this candle right here. Blow it up. Right here, back at the zone. There's a small little imbalance or gap right there. And because of that, that makes this area on the lower time frame chart just as well, what? A lower base chart, just as well as a high probability setup, okay? Breaking structure to the upside, zone on the inside of the bigger zone. This, again, allows me to redefine the area on the inside of the larger base zone and take more of a precise entry point. At that point, once the market has tapped into the 120 range and the 24 range demand zones, I'm just looking for the break and close of a candle above the last down bearish candle and go long from there. Simply put. Now, what do I look for and aim for? Well, first and foremost, you may be asking, okay, so where do you place your stop at, right? Okay, here's this information I'm giving you guys today. This is a freebie, so right, pay attention, watch the video, rewatch it again, okay? The stop is going to go back at the point of rejection or reaction on the lower base zone, the 24 range zone. It goes back at 21,261. Give yourself a few points below that area, okay? Because they love to go up and then come back, and they're going to probably try to stop these buyers out right here, okay? Maybe. They do that sometimes. They wick below, grab liquidity, push to the upside. In this case here, they didn't, but your stop's going to go back a few points below 261. Your entry point, if you get in aggressive, for me, it's going to be more likely right here at 21,267, or the break and close of the candle could be right around here at 270 above the last down bearish candle, okay? Where do we aim for profit? Well, once we're into the trade, we look above. I typically look back at my my higher base chart to see what does the chart look like. Are there gaps that can be filled back to the upside? Is there liquidity that can be ran back to the upside? So let's see. Looking back at the higher base chart, there's a gap right here on this candle here. There's a gap on this candle here. There's a gap back up here just as well. So, first and foremost, I would be aiming to fill back up the market reject for this area here and then back up to this area here as well, and back up to this area right here. And look to see if the market's going to take out this high here that it just made, where from where it came down and pulled back right here to run areas of liquidity. There's also an area of liquidity right here in this little zipper right here, as you can see, where it push down, pull back, push down, pull back. Just a little small little area of liquidity that can be ran right here. Basically areas where you have equal highs and equal lows at, off of a swing or a small little zipper area can also be areas of liquidity, but definitely at highs and lows, okay? So I'll be looking for the market to fill areas going back to the upside after we get the rejection. So we're looking for multiple means of confluence, and we get that off of this area right here where there's a higher base zone here, high probability, gap or imbalance resting at it, and then the same thing on a lower base chart, we see that. So multiple means of confluence resting back at the zone, okay? Multiple means of confluence. So that I like to actually see. Also, if you like this, right here where the market broke up, if you look at the VWAP right here, the market created a zone where it's breaking structure, we're above the VWAP. It came back to it, dipped below the VWAP, slightly on the 120 range, but the demand zone was resting above the actual VWAP at the time that it was created, where it broke structure at to the left hand side of the chart as it was making higher highs and higher lows. It broke back above the VWAP, comes back to it. I'm going to look to possibly, take the entry actually going long. Okay, so that's what we're looking for, is multi-chart confluence. That is the strategy in itself. Now again, and when you find things like that, I like to wait for it, because a lot of people say, well, what happens if you don't get the zone within the zone, meaning the 24 range, smaller zone, identify one that's on the inside of the larger zone? Then I'll just wait it out, guys. I'll wait it out and find a better, another opportunity is what I'm trying to say. But again, I'm going to be breaking the trades that I actually took today over to, if you're a Discord member, not Discord member, if you are an Elite Channel supporter, I'm going to be breaking them down and posting them so you can gain access to that video content. And it's going to be a very good video today for the Elite Channel supporters. I'm going to be going in depth on 2 entries that I actually, on 2 trades that I actually took more in depth today, and breaking that down and talking about liquidity as well as part of the setup, okay? Because liquidity is very important when it comes to trading. So please pay attention, especially if you're an Elite Channel supporter. Again, if you want to become one, then the link is down in the description portion below. The first link is the Discord. The second one is the Elite Channel supporter. If you click on that link, you'll see what 2 tiers will pop up. Again, this is through the YouTube tier membership program that allows YouTubers to be able to, to where you guys as followers or viewers can support content creators like myself as not only as a content creator, but as a trader. But I give back this valuable information, and then it's up to you. I'm not telling anyone or forcing anyone, oh, you have to trade like me. No, you don't at all. If you've got a system that works, please stick with that. And because I always talk about here, wherever you find consistency at and you're profitable, continue doing so. Do not try to fix something that's not broke. Okay. So I talk about that. But for everyone who is part of the who is a supporter, thank you for being a supporter here in the community and supporting my efforts as a content creator and trader as well. And this is what I give back, is showing you how I do this each and every day and what I look for. Just breaking the strategy down, so that you know. And to everyone out there has commented and said, Mike, thanks for being so informative and making this video content and sharing this information. And so I'm basically giving it away. It's like I believe in doing so. I believe that passing the buck forward helps other individuals out, because there's people out there that are looking for the same answers that someone else may already have. So spreading wealth or knowledge is in the end is what helps people out truly. So that's why I do it. But outside of that, that's all I have for you guys today. If you're not a current subscriber, please take the time to go ahead and sub by clicking the subscribe button down below. Make sure to turn your post notifications on so you do not miss any of the uploaded content when I post. And last but not least, if you found value in today's video and the content that I provided within this video, please make sure to drop a like by clicking the like button right now. All right. I'll see everyone in the next video. Take care and have a great rest of your day.